Bitcoin is back above $100,000. Ethereum has just reclaimed $2,000 and exploded over 30% after the long-awaited Pectra upgrade that went live on Wednesday. We've had the FOMC decide to hold rates steady, and Trump's press conference yesterday outlining a major tariff deal with the UK. And oh yeah, Coinbase just acquired Deribit for nearly $3 billion. Markets are moving, headlines are flying, and I'm here to tie it all together and get you ready heading into the weekend. My name is Paul Sampson, and this is DataDash. All right, folks, $100,000 has not only been reclaimed, but we are holding it on a daily closing basis at this point, well within the range that we've been highlighting for the last few weeks here. We're going to cover all that here in a bit, right? So we've got price action holding very nicely above all moving averages, all high time frame averages. Honestly, everything's pretty bullish for Bitcoin. Now, a few things this week, aside from the FOMC, the Fed deciding to leave rates unchanged, which really was a more neutral decision. More than anything, it just kind of aided into the more bullish sentiment and momentum with a couple of these other things that kind of came out later. And yesterday, Trump had a press conference where he was agreeing to cut tariffs on UK auto, steels, aluminum in a planned deal trade with Britain. So that obviously sent some positivity through the market as we're seeing more and more deals come to fruition here with these tariffs across these other nations. Coinbase also ended up basically acquiring Deribit, which is another platform, for nearly $3 billion. And as Anthony Pompliano stated on X yesterday, that is not something we tend to see in a bear market. Generally, companies will seek to acquire other companies and attain acquisitions when their company and their balance sheet is obviously doing very well. So that is a good indication for Coinbase as a whole, especially in a time frame where even the last few months here, the crypto market was not doing the best. So is that a sign for more positivity to come into the markets? In my opinion, I think so. Yet to be seen, of course. All right, folks, I got a pretty simple outlook here for Bitcoin. Just a little quick overview, especially if anybody's new to the channel or new to my style. I utilize many tools when analyzing the market. At the same time, I keep my charts extremely clean and kind of packaged away. So as you can see here, I have two horizontal levels and essentially just the three major EMAs highlighted here. One of the two areas here was the quarterly pivot, which was our average of price from last quarter, which was likely to be met this quarter. And now that is such a distant memory at this point. It was $89,000. But if you recall, when we were trading down at $74,000, that was a major target area, as well as basically this 3M, which is a quarterly level at 93,000. And then the overall gold pocket and point of control area, right? So these were our big three regions that we were targeting when we were trading all the way back down here. Now, as always, folks, context is key. So even when we were targeting those areas down at $74,000 and $77,000, originally there was a big part of me that was notating that 97,000, which was the gold pocket that I just highlighted a second ago, which is pretty much where we were hitting our head on Monday or after the weekend as we started Monday. Now that region was truly the key area to basically get through to seek more upside. And to me, that was going to signify a pretty big sign of strength. On top of that, we just reclaimed $100,000. If I'm being truly honest and just very clear in my bias at the moment, barring short-term pullbacks along the way here, I fully anticipate this market to break out higher in the weeks to months that come here. I think that we just put in quite the reversal here, have the making of a new uptrend that is forming here. And the few things that really give, once again, the context of that bullish momentum, even before we did this move right here, was when we came down and we swept our previous quarter low here, right? So once again, for anyone that's new to me, I'm utilizing the fixed range volume profile tool to basically pull the volume data for a section of the chart. In this sense, I'm pulling it for quarter one of this year. And I've highlighted the overall value area, which is where 70% of the overall data takes place. And essentially, when we started this quarter, we came down and we swept that low, very similar to what we did at the exact all-time high. We took the high here and then we rotated the new range. When we started this quarter, we swept the low right here. We reclaimed it on a daily closing basis. That was my first indication that we'd probably see some upside, at least up to the 89,000. The second indication was when we reclaimed $80,000, which was our yearly pivot. So when we're looking at this as the average of last quarter, likely to be met this quarter, 80,000 is our yearly average. So that's the average of price from last year. Very similar to 200-day, 50-day, except this 365-day non-moving average. So it stays put, and above is bullish, below is bearish, and pretty simple as that. So not only did we sweep the low right here with extremes as far as news would go, fear would go, right? The tariff uncertainty was running at peaks here. We ran it back up. This is where we signified that we would more than likely going to have a short squeeze, and all that is that when you get a hard and fast move to the upside, which we obviously did here. Our yearly open, which was the original untapped quarterly level, which was my first real line in the sand to seek some strength in the market and really signify that we were going to see some sizable upside here. And we closed daily candles above that. And this is where things really changed for me. Obviously, we came up and we tagged that gold pocket here. And I was looking for a potential to come back down towards the bottom of the range, because that would just be a normal thing to see. Almost like if you're looking at a falling wedge or a bull flag and any of those other like type of patterns, you get a breakout and you get a back test of your overall support, basically. So something along those lines was something I was targeting on Monday, I'll be honest. Although the overall idea here was that we would rotate the range to the high side. So we never gave up the yearly open. We've obviously gotten a really big push through here. This was our point of control. So once again, looking at this fixed range volume profile, this is where the most amount of volume takes place. It's known as the point of control. It aligned with that gold pocket and all those good things. So that was a really big area of resistance to get through. And the fact that we just pushed through, closed the daily candle well above it, even though we may come back down and back test it now, that is a huge sign of strength to me. And I fully anticipate rotating this range at this point to $106,000. Whether or not we range a little bit to the side before we do so. But overall, now this has the making of a new trend in place here, right? So we've got some substantial highs. We just came through here and have made new higher highs now against all of them, except for, of course, the all-time high. So when we're just kind of breaking this down and compartmentalizing this in a shorter area, what we want to see is just this exactly. So looking for that move probably up to the $106,000 area next. That's our next major line in the sand, in my opinion, as far as the next area maybe where we reject to short term. Or if we flip that, it's just off to the races, new all-time highs at that point. But this is the area I'd be looking to for the next major resistance as $106,000. But overall, just to be clear, I anticipate this range resolving to the upside. All right, we've been covering the Pectra network upgrade for Ethereum, which went live on Wednesday and had a laundry list of updates and upgrades to Ethereum that was pretty substantial. And if I'm not mistaken, it was probably the most sizable update to date, which had pretty sizable updates, including things like easier institutional staking. Now that we have all these ETFs and instruments through the institutions for them to utilize, it's important for them to be able to easily stake their Ethereum, as well as their supply, validator deposits on chain. And as I said, just a laundry list of other additional new additions. With this update came a sizable increase to the price action on Ethereum with over a 30% move to the upside. And folks, before we jump into the Ethereum price action, I just really want to highlight the fact that there's going to be some senses of FOMO, and the price action of things is really increasing rapidly right now. And people are going to think that they're going to miss out, or they already have missed out. And it's time and time again, we see these same emotions take place. And I will always state that I would never chase a green rally, like a pump, basically. I don't chase the green candles because more than anything, especially if you're looking at fresh entry ideas, whether it's short-term, long-term, whatever the case is, your entry is everything. And you don't want to be walking into something that has a higher probability of a immediate 20 to 30% being underwater, pullback essentially. And that is really the reality when it comes down to the current market right now. After something pumps 60%, 100%, 30%, 40%, the likeliness of it pulling back, even if it's just a little compared to the size that it already ran, is detrimental sometimes to someone if they're coming in with fresh capital. So I always suggest just let the dust settle. There's always going to be a red day. Things will not just endlessly pump to the upside. Take a step back, strategize, come up with a game plan, and just be patient, right? So if not even for some reason, I know why many people probably missed some of these later moves here, especially with Ethereum, but in general, the market as a whole, because of the uncertainty around those tariffs just literally just a month ago. And it's just how quick this market can change. But yeah, if there's anything that you take away from just the next coming charts that we're going to look at, yes, it's exciting if you're already invested and if you've been holding or if you bought some of these pullbacks. but it's not the time now to be rushing into anything by any means. Just wait for a red day is my suggestion. Obviously not financial advice. Do whatever you'd like to do. Okay, weeks on end here, I've kind of gone over the idea that we were seeing a potential stairs down an elevator up scenario. Now, generally we see that in the vice versa, I guess, equivalent, right? Where almost this was a good example where you get like this little stair step up and then you get the quick moves down, right? So it's like a slow grind to the upside, and then you get these liquidity events where something occurs, you get maybe it's a PPI data release or something that comes out and get a quick spike to the downside. Well, we've had nothing but these slow drops over the last couple months here. And generally, to me, at least in my experience, these are followed up with a pretty good reversal, and they're usually hard and fast. And a couple things here, and the same thing just happened to Bitcoin, where we pushed up from that overall sweep of the low, and then we were basically reclaiming the 21 daily moving average, and we were squeezing right between the 21 and the 50. That's what this white line up here is. And not only that, we had that potential short squeeze that I had highlighted due to some behind the scenes things such as order flow and things of that nature. But this was a really interesting thing to note because we got that pop to the upside out of those EMAs basically. And I highlighted that we had the same setup here pretty much, I'd like to say on Monday. If it wasn't Monday, it was Friday's video last week. But we saw the same deal, right? We basically popped into this region. We were holding the 21 EMA. We were squeezing right between the 21 and the 50, all right? And then what do we get? We essentially got a short squeeze right out of there as well, right? All that is usually a hard and fast move right to the upside. Now, in this case, we've got our 200-day coming in right here at 24.40, which is a key level for a few reasons here. A, it's our quarterly pivot, which is the average of price from last quarter that has not been met. So anytime you see an asterisk on my charts, that is a untapped level. It is very, very important. I very rarely will have anything on the chart that doesn't matter. So in this case, this is a very key target here for the quarter two, basically, of this year, as well as my just overall theory of the stairs down, elevator up idea. We also had a bullish harmonic pattern that basically completed down here when we swept these lows, which was the lows of 2023, which is just another big thing to really consider here, is that even though the overall market is, in my opinion, still pretty bullish, although we had a pretty big decline here in ETH, and it's really done nothing to materialize a overall uptrend so far. It is important to realize that in the course of a few months here, we unraveled over 2 years of gains, right? So it's just another really important thing to just note when looking at times where you're up substantially or vice versa. That whole entry idea, entering at $4,000 Ethereum, even though it seems like it's not necessarily this huge grand area because it hadn't made a new all-time high quite yet. That was just a region where you're talking about something that is up from 2020, at least, if you think about it on a higher time frame. Something that was $80 then was $4,000. It was that the place to buy, or was it after looking for these pullbacks, right? Even if it was 2,100 originally and then now down to 14 and 15 and 2,000 again. But anyways, neither here nor there. So we swept the lows. We've gotten a nice sizable rise to the upside. I've got 2 levels identified here. And reason being is that when I pull up my bullish harmonic setup, this is what's known as a bullish alternative bat. And generally we see these with some nice extremes one way or the other. So in this case, with the completion zone at the bottom, this is a bullish setup. If the completion zone is at the high, then there would be a bearish setup similar to an ascending channel, right? Generally, when the price action is going to the upside, it breaks down. Same thing here. When the price action is coming to the downside, we break up. And the overall targets of this is just a sequence of Fibonacci's, by the way, that has certain set ratios as well as certain rules and targets that go along with them, right? So with the completion zone here, right into the sweep of the lows, this is where I was anticipating to see that move. The confirmation of this was a reclaim of 1670. We got that. We got that little squeeze into the EMAs. And then now we've gotten a real squeeze, which is really the elevator loaded. And the two elevator targets, so to speak, are the harmonic targets, right? So it's a simple fib pull from the high to low. It's the 382, which sits right on top of our quarterly pivot. So a little confluence there, as well as that 200-day EMA that we were looking at just a bit ago as well. So there's 3 things kind of stacked right at 2440 is the first major target. The secondary one is our B point, as well as the gold pocket. And there's also a weekly NPOC, which is those point of controls that I highlighted from that fixed range volume profile. That is just an untapped point of control that we left behind a couple weeks back. By itself, I wouldn't necessarily look at it too heavily, but it is interesting because I just stacked it on. It's just a third, kind of confluence point for this region too. So that is the major target here. And when talking about things in the sense of, do I anticipate this to go straight to 3,100? I do not. All right. This overall setup took 8 months to complete. Probably would imagine it's going to take a few months to completely unfold, meaning to hit the targets here. If you want to count the bottom at April 9th, it's been about 1 month to get here. I do imagine we push up into this region about that 2440. But at that point, I will look for a pullback, right? And at that level, you're seeing some new uptrends kind of emerge. And even if we come down to, let's just say a 382 or a gold pocket, right? Something along these lines before you continue up, maybe we push up to 2,400 and we come back down to 2,000, 1,800, still higher lows across the board. And then we push up to the next target after that, right? That's very much something that we could see here that may take a little bit of time, right? It's not always just a straight up only. Even coming down, this was very much ups and downs along the way, even though it just quickly now looking at it, it looks like it was just a straight down move. So to kind of finish off ETH here, we've got some bullish news. We've got bullish price action setups here. We were pretty much overextended to the downside. We had sentiment, quite frankly, in the garbage. It was a perfect setup, in my opinion, for ETH to get a sizable little move here. And realistically, it's done nothing of material, right? This is a 60% move, yes, but after a huge decline, and we're not even trading back to where we were in March, right? So realistically, nothing has really changed here, but I do anticipate that we would at least push through to these targets in the next coming weeks and months. Time to do another update on gold here as well, as we pretty much just stalled out a little bit ever since the $3,500 peak just a few days back. And while we're on the topic of gold, I want to take a moment and spotlight a platform that's doing something pretty unique in the world of precious metals, and that's Kinesis Money, a channel partner here at DataDash. Now, if you've been paying attention to the broader macro picture, rising global debt, inflationary pressure, and increased market uncertainty, you already know why hard assets like gold and silver are playing a growing role in protecting wealth. They've served as a store of value for thousands of years, and they're proving to be just as relevant in today's digital age. What Kinesis is doing is merging the time-tested value of precious metals and modern usability. They've built a full ecosystem where you can buy, sell, and manage fully backed gold and silver, all while knowing those assets are physically stored and regularly audited. It's a true metal-backed monetary system, giving people around the world an alternative to fiat currencies and helping bring sound money principles back to the forefront. And here's the cool part. They're running a special referral bonus right now that when you sign up using the code DataDash, you and I will split 1 ounce of silver. That's half an ounce of silver automatically credited to your account just for getting started and exploring what the platform has to offer. No trading requirements, no hidden terms, just real value for joining a system designed to preserve wealth. So whether you're new to precious metals or looking to diversify alongside your crypto and traditional assets, I highly recommend you check them out. Just hit the link down in the description below and don't forget to use code DataDash and start stacking with Kinesis Money today. Huge thanks to Kinesis for supporting the channel. All right, so gold has had an incredible rally, once again, off the back of the last couple of years here as well, pretty much trading at the all-time highs now. And similar to what we were just discussing, where this is probably not the best idea as far as risk goes. Even if this continues higher, you're taking a risk entering right now of an immediate 10, 15, 20% pullback, right? So you just have to accept that if that's something that you have to have. If you just are like, I need to get gold before it runs without me, whatever the case, right? If that's something you're afraid of. For me, I'm looking at a couple of different things here, right? So let's just take a look at our EMAs as well. Daily time frame here, the 21 is holding up very well here. You can see the 50 is just below it here. It comes in about 31.50. That's probably the first area I'd look to for just a little bit of a more local pullback. And then if we get anything more than that, I'm looking down about 3,000, like right under the $3,000 mark. Overall, I do anticipate we still march higher towards that 36.61, which is the area I originally targeted that we front ran so far. We stopped at about 3,500 on the dot. So about $160 off of that mark. So in pretty simple terms here, we're holding some key support right here. If I'm looking to buy any gold locally with the anticipation of continuation, I'm looking for, I guess where it is now is an option that you just have to be aware that you could see a pullback from where you enter at. 31.54 is my first probably smaller entry area that I'd look to. We've got a quarterly NPOC, so an untapped point of control. Sitting down at about 2,900. I really like that because it's just below 3,000, kind of breaks that psychological level. So it's just an area where I feel If we did start coming down to those areas, people probably anticipate more of a pullback. However, we'd come right into a key level. We'd break a psychological barrier. That is a really big region I'd look to. And then probably a more aggressive buy zone would be the 2024 high, which is back to 2,800. So don't necessarily know if we get down to those levels right now, but yeah, 3154 is a big one. Also that basically 3,000. And then overall still targeting up to 3661 is the main thesis. Okay, the SPY, which is the ETF that's measured against the S&P 500, similar to Bitcoin, very bullish in my opinion. We put in a pretty nice low, essentially, right into a gold pocket back on the 9th and 10th of April last month. Ever since then, been pretty much just a V-shaped recovery. We've got our quarter one low, which I was looking to reclaim at that point. So another sign of strength right here, as well as we have our 21 EMA, our 50 EMA, our 200 EMA prices living above all of these at the moment. They're about to all converge, all heading higher. And while the resistance at the moment is sitting at 572, and that is a weekly NPOC, so one of those point of controls, again, just a little add-on as far as confluence would go. And the quarterly pivot, so the high time frame average of price, last quarter's average, this quarter's target, essentially is what it is. Short term, I see the price action heading up to that. It's not too far away from where we've already been. Obviously, it doesn't seem like a huge move now. When we're trading down at this area, this didn't seem like it was a very realistic target. But this is the line in the sand for any more upside, in my humble opinion as well, right? So this is our high time frame average here. This is our low volume target. And then overall, this is where our quarter one range low starts. So if we flip this region, it's going to be very much similar to Bitcoin. When Bitcoin flipped 89,000, we were back in the range. What did we run to? We ran to our point of control. So similar to that, we'd look for that in a SPY. So the 572 level is the little level to beat now. From there, I'd look pretty much for a quick move up to 602. Wanted to touch on the DXY as well. I've brought this up a few times here before, but really wanted to highlight this is a bearish harmonic pattern here. So once again, a sequence of Fibonacci's that have a certain set of rules, certain set of ratios, and certain targets. And basically, this is a humongous time frame. This is on the weekly time frame. This pattern began in 2001, completed in 2022. With a pretty perfect back test and confirmation right here, where we came up, we put in a lower high right into a gold pocket, which pretty much confirmed this pattern. From there, we were targeting similar to Ethereum. Ethereum has a bullish version of this. This is the bearish version where we completed at the high. So similar to like a ascending channel, right? You break down. And targets for this are the 382, the B point, and our gold pocket. Okay. And we actually just came down and tagged the very first target of this. And I want to point out that, once again, this took 20 years to complete. This is not going to be something that comes down to all targets anytime soon. I actually imagine from time of completion, it would take about 8 to 10 years for the gold pocket to be met. And for reference, this was 2022. We just hit the first target 3 years later. And more than likely, which we already are getting, we probably see a little bit of a bounce here. And overall, the DXY is a pretty inverse correlated asset that goes along with the risk on assets. It's not perfect in that sense. We're just thinking that, okay, if DXY goes down, crypto and stocks go up. It's not always the case, but more than most times it is. So it's just something to be kind of aware that I'm aware of, I guess, on a grand scale here. Because while some have speculated and anticipated a pretty big recession or depression or anything along those lines is on the verge or coming or whatever, my theory is that we're actually putting in the very last stage of the 20-year housing market cycle, economic cycle, business cycle. In my opinion, the very first 20-year crypto cycle, and that's a 18 to 20 year, let's just say. So it's very vast in the years and the scale that it is, right? So I'll go into deeper explanation of that in later videos, but with this DXY example, basically pointing to more downside over the next coming 3 to 5 years, it indicates that the markets as a whole would more than likely see more upside for the coming years. So I don't think that recession and depression and all those negative things that everybody's been targeting since COVID, I still think that they are a couple years away towards the end of the decade. And then we will probably see a Great Depression 2.0 style move there. But for now, just kind of pointing to when I'm looking at the SPY, when I'm looking at Bitcoin, and when I'm anticipating more upside in the markets as a whole, and the DXY actually coming down, it all kind of converges together. So just very interesting stuff. And that's going to wrap it up for today's update, folks. It's been a wild week across the board, from Bitcoin reclaiming 6 figures to Ethereum's explosive move after the Pectra upgrade and everything in between. If you got any value out of today's video, please be sure to drop a like and subscribe to the channel so you don't miss out on any of our future uploads. And of course, a big shout out to our channel partner, Kinesis Money, for supporting the content. Please check them out using the link below. And don't forget to use the code DataDash for your silver bonus. Also, one last thing, I'd really love to hear what you're watching in the markets right now. Please be sure to drop a comment below with your thoughts or any questions you'd like me to cover in any upcoming video. I always appreciate the dialogue. And with that, I wish you all a great day. Until the next video, everybody, I'll see you on the next one. Cheers.